Alright, let's talk about a name you know, Intuit. This is the company behind TurboTax, QuickBooks, Credit Karma, and MailChimp. Think about it. Here are the logos together. This isn't some fly-by-night operation. This is a financial technology juggernaut. It's the bedrock for small businesses trying to manage their books. It's the go-to for millions of people filing their taxes every single year. When a company becomes a verb, like I need to do my QuickBooks, you know you've got something special. That kind of brand power is what we look for. Now let's get down to the nitty-gritty, the dividend. A lot of you ask me, is Intuit a dividend stock? Here's the deal. Yes, Intuit pays a dividend, but you need to understand what kind of dividend player it is. Not a high-yield utility you buy to clip the coupon. This is a growth company that also rewards shareholders. As of late 2023 and into early 2024, Intuit's board approved a quarterly dividend of 90 cents per share. That annualizes to $3.60 per share. But here's the key. The dividend yield is still low, hovering around 0.5% or 0.6%. The real story is dividend growth. This is where it gets exciting. That 90 cents, it was a 15% increase year over year. A 15% raise. Intuit is a cash-generating machine, committed to returning more cash to shareholders over time. They've consistently raised the dividend year after year. That shows management confidence. You can't talk about a stock without talking about the earnings. Everything else is just noise. So let's look at how Intuit has been performing. We'll look at the numbers from their fiscal first quarter of 2024. The company came out and blew the doors off. Revenue came in at $2.98 billion. That was a 15% increase from the same time last year. 15%. In this economy, that kind of growth is spectacular. It shows their products are in high demand, no matter what the market is doing, but it's not just about the top line. We have to look at the profits. On an adjusted basis, earnings per share came in at $2.47. The Wall Street consensus? They were only expecting about $1.98. That's not just a beat, that's a complete blowout. This tells me that the company is not only growing, but it's also becoming more efficient and more profitable. Let's break down where that growth came from. The small business and self-employed group, the QuickBooks empire, saw revenue jump 18%. Credit Karma saw its revenue grow by 11%. That's a fantastic turnaround and shows the acquisition is working. The consumer group, mostly TurboTax, was up ahead of the main tax season. The whole machine is working in concert. There's no weak link here. So what's the new catalyst? What's the next big thing for Intuit? 2 letters. AI, artificial intelligence. This isn't just a buzzword. Intuit is weaving AI into the very fabric of its products. They call it Intuit Assist. Intuit Assist will appear in QuickBooks, TurboTax, MailChimp, Credit Karma. It can help a small business owner create an invoice, analyze cash flow, draft a marketing email, all by asking a simple question. That makes the product stickier and far more valuable. This AI assistant is a game changer, like having a CFO in your pocket for a fraction of the cost. It can proactively find tax deductions in TurboTax. It can help improve your credit score in Credit Karma. This isn't a future promise and it's rolling out now. Beyond AI, the platform strategy matters. Credit Karma acquisition. MailChimp acquisition. Both strategic to build a financial platform. Solve customers' financial problems. Accounting, marketing, credit. Integrated services sharing data with permission to provide unique insights. A powerful interconnected ecosystem that's hard to replicate. So what does the future hold? Is it too late to get in? No. In the short term, the story is all about tax season. The TurboTax franchise is a seasonal cash cow, with new AI features poised for a monster year. A strong tax season equals a huge jolt of cash flow. Cash flow funds more innovation, cash flow funds more shareholder returns, the dividend. Looking longer term, the international market is huge and untapped. QuickBooks is a household name in the United States. They're just getting started overseas. Small businesses in Europe need these tools. Small businesses in Asia need these tools. Small businesses in Latin America need these tools. As Intuit expands its global footprint, it opens a new addressable market for the next decade. This isn't just a US story anymore, it's a global story. Of course, there are risks. No stock is a sure thing. The biggest risk is competition. Smaller, nimble fintechs are trying to chip away. There's also the risk of a government-backed free tax filing system. However, Intuit's moat, built on its brand, its scale, and its new AI platform, should help fend off threats. They aren't standing still. They're innovating fast. So, is Intuit the best dividend stock for 2024? If you want pure high-yield income, no. But that's the wrong lens. If you want a best-of-breed tech company, fantastic growth, a deep competitive moat, and a rapidly growing dividend, Intuit belongs on your shopping list. It's a way to get paid while you wait for appreciation. For long-term investors, growth plus rising dividend is a beautiful combo. It's a core holding you can feel good about owning for years.